So hi, good afternoon, everyone.
Good afternoon.
Perfect.
Hi, good afternoon.
Yeah, hi, good
Hi,
afternoon.
everybody.
Awesome. So let me start this webinar. First of all, welcome to all respected panelists as well as, okay, start my video. I myself was not on, okay. So thank you. Okay, so welcome to all my respected panelists, investors, agriculture industry leaders, and surely the tech entrepreneurs who are joining us for this virtual agriculture roundtable on AgTech. This session is focused on investment, and we are looking forward to our awesome audience in LinkedIn to look at it and also share their comments and views and questions in case they do have. So it is an honor to be moderating such an illustrious panel. As I said, we are having some of the best in the world at what is not just another event, but a defining gathering for our sector. We stand at the intersection of investment, innovation, and for sure necessity. Necessity for a very simple reason: agriculture and food is just not about a business, but it is a human necessity. Where our market forces are mission driven, the opportunity is converging in shape of technology, innovation, food, climate, biotechnology, and many more, which all are converging to give us a better life. Let's talk about first the elephant in the room, the capital flows and the new agri investment reality. So if we see that we had a bad turbulent 2023, but things started improving in 2024. So from roughly hardly much investment happening in 2024, we saw that in 2023, sorry, we saw that in 2024, close to $16 billion were invested in AgTech and food tech. 2025 looks even better. So we are looking at investment anticipation of close to $18 billion this year. And again, as I said, that because food is important, this sector is always resilient. Whenever there is a dip, we find that the market generally corrects, and again, the investment flows start happening after some changes in the overall ecosystem. Coming back to India, India had a very bad 2023. In fact, we were at sub 1 billion or close to 820 million US dollars investment only. But 2024 was surely better with 2.4 billion coming in. But this extraordinary surge was predominantly mostly in growth capital and advanced funding rounds. At the same time, we are seeing in 2025, the interest has again started when we talk about the initial or the early stage investment in agriculture. We are seeing a double-digit growth going forward in next decade, and this is where I believe that the resilience of Indian agriculture ecosystem has also played a very important role. Now, if we see the signals are coming from two important sectors. One is biotech, typically application of biology in agriculture and food, where venture capital has actually shown a rebound in investment of close to double digit with technologies like gene editing, synthetic crops, edge innovation crossing between food as well as the wellness and health. Similarly, climate tech, while 2023-24 have seen the funding going down, but COP30 has again initiated a positive investment from sovereign funds as well as from those large impact funds which believe that the future of this generation depends heavily on how do we environmentally tackle agriculture. And we are again seeing that in durable climate robust asset investment happening. If we go by micro trends which are shaping the or which are going to be shaping the next decade, we have already seen that while we used to talk a lot about digital ag, now it is actually taking mainstream. Already we are seeing that whether it's a farm management solutions, digital market linkages, tech-enabled finance have been started powering millions of smallholder farmers and for sure large operations alike. Now this is a positive change where actually a technology which has been talked for more than a decade now coming to mainstream. Now we are also seeing that the biotech and synthetic biology, which has were just buzzword till now, has also started getting into the real business. Whether we talk about practical engines driving the alternative proteins, resilient seed varieties, and at the same time also biological products, we have seen that they are showing double-digit growth across the world. So this sector is also coming into the forefront. Last but not the least, while we are seeing that very crucial, which is climate tech, uh, it is still in infancy, but the carbon market platforms, which are verifying, scaling, and in monetizing the positive impact of the technology and the activities, for example, regenerative agriculture, are showing us a possibility where a sustainable technology will play a crucial role going forward when it comes to investments in agtech. Now, we are also seeing that the business model are also evolving. So when we talk about the power of public-private partnership and capital strategies, the multiple way of funding has also emerged. Unlike in the past where it used to be very simple like VC funding, now we are seeing the approach to be whether it's a collaboration between regional and global players, whether it is a collaboration between public and private, whether it is a collaboration between debt as well as equity. So all of them are playing its important role. So we see early and expansion stage investment, which is actually has gone beyond headline hunting. The investors are now prioritizing the quality of the asset as well as also how soon any of the invested company are gonna become profitable. This is especially seen in Southeast Asia and Africa, and India, no doubt, actually being a part of the South Asia, is also showing similar trends. Even when we talk about the public-private alliances, the policy and sovereign capital is playing a catalytic role. We have seen that countries like India, where the government itself, they have allocated billions of dollars in different type of scheme, whether it is debt-based scheme like agriculture infrastructure funding or equity-based scheme where actually again, we are seeing thousands of crore being made available to different venture capital firms to deploy it in early stage startups. Similarly, we are also seeing a change in how the corporates are funding startups. Previously, they used to be predatory. They used to always look for a majority stake, but now they've started taking minority stakes. They are forging joint ventures, and they're also backing the strategic pilot so that in future they can leverage whatever the good technology has been created. This is blurring the old boundaries to drive agility and co-innovation. Now, what's driving investment today? For sure, as I said, food security and climate resilience is talk of the town. Everybody's talking about it, and we are also seeing in innovation circles and investment circle this playing a very important role whenever people want to write a check. Similarly, policy mandates they are mattering a lot. The countries where actually we are seeing that the environment is receptive to look for cross-border trade, creating technology which can increase export, or creating a sustainable platforms which are able to produce something with minimum environmental footprint are getting premium pricing. So policy mandates are also playing a very critical role where the investments are going. Now we are also seeing that the global scale tech is shaping up, where nobody is now, unlike in past, looking at nationalist technology. We are seeing innovation from India reaching Europe, innovation from Israel reaching India, and at the same time, innovation from Europe touching across Africa or even Southeast Asia. So we are seeing that democratization of technology not just within the borders of a country, but beyond the borders of the country. Now that also comes with a lot of challenges. So we are already seeing that pilot fatigue. 92% of all the pilots in technology actually don't see the light of the day and go to the next level. So we have to find out how we can do better pilot management so that actually whatever investment are going in pilot can be leveraged and the success ratio can be increased substantially. Similarly, we are seeing the regulatory patchworks. So sometimes what happens is that the agriculture is a political, social, and economical subject, and the interest of any government to put policy or to be having convergence of three, and sometimes it hampers the swift market entry, particularly when we talk about cross-border technology expansions. Similarly, we have also seen a challenge in value compression. So post 2022, we have seen when the investment started dipping up, and not too many founders were keen to go for a down round. But the market realities were that actually either you die or you go for a down round. So that is also one place where we have seen that because of the valuation compression, there has been challenges. But I think the pricing resets have already shaped the venture in last 2 years, and going forward also we'll see those happening. Similarly, the last but not the least, the exit path. Not too many edtech startups have been able to either go for an IPO or an M&S, and both of them have slowed down also. And the secondary markets, when they dry up, it also impacts the investment directly in the technology and innovation. So based on these challenges, we are having a very extraordinary panel of experts today, which would be dissecting these issues. So we are having Shirley Shahar. She's a founder and general partner at DeserTech Ventures. She invests in early stage AgriTech as well as climate resilient agriculture innovations based out of Dubai and also touching across the GCC market as well as uh, taking the Israeli innovation forward. Then we are having Shruti Srivastava. She is investment director at Avaana Capital. She's scaling sustainable technologies and funding high impact climate solutions in agriculture. Uh, Mr. Arindom Datta, he is one of the legend in the industry, the early mover when it comes to investing in sustainable agri businesses and technology. So, Mr. Arindom, welcome. He will be talking about bridging finance, sustainability, and technology for real world farm and supply chain impact. Then we have another extremely respected professional in the industry, Mr. Emmanuel Murray. He is investment director at Caspian. He is the early pioneer where actually he was able to put in the market that blended finance is very important for the sector to take it forward. He is advancing the inclusion of financial models and scalable AgriTech ventures. Then we are having Subhadeep Sanyal. He leads the Indian operations of Wavemaker Impact. He is backing climate positive tech forward agribusiness models across South and Southeast Asia. Then my first question to you, first of all, welcome to everyone. It was a pleasure to have you here, sir, and madams. So may I go to Shirley first, the lady in the room, and thanks a lot, Shirley, for being part of it. So you have
My,
been investing into frontier technologies, and especially we have seen that Israel has always played a very important role when it comes to agriculture innovation for obvious reason like lack of land, lack of resources, and still able to feed geopolitically, I would say, cornered country with food. Your initial view that how do you see the frontier technology, especially coming from Israel, making an impact across the globe and maybe in India as well?
so Deepak, thank you for having me. Really pleasure to be with this respected panelist and of course with your team. Yeah, we've been playing a major role, specifically in early stage. As you know, we are living in a small country. Food security is very much an issue for us. Also, when you look at the region as a whole, Dubai, Abu Dhabi, and Morocco and others. So for us, the main driver is the early stage solutions. How can we bring our strength and in academics, specifically around technology, because Startup Nation is all over here, and really translate it into food security tools. I think for us, these years, very much like you've mentioned, biotechnology, working on smart farming ingredients, synthetic crops, gene editing. This is the deepest tech that we know how to tackle in food security. And this is what the Israeli ecosystem is very focused on. I think for me specifically, I work with one of the best institute of research in the world around that. So Weizmann Institute really brings a lot of technology into the arena of these sectors. And we understand that food security has some kind of a glass ceiling. We try to find the right solutions to break this glass ceiling with the technologies. It's clear to us that the basic solutions will have to go to find their ways in the larger market. This is why we see potential in working with the MENA region, Africa, and of course, India. The journey, the innovation for the journey of the innovation for us is multilateral. So, okay, starting the technologies from this region, but being able to scale and go to market in places like India sounds like the holy grail of food security in general and the technologies that we are looking after specifically. Again, we, on the other side, other than very deep tech, we see the potential of, as you mentioned, blended finance, new models around around the business, and understanding how we can push natural solutions like regenerative ag in the larger scene of Africa, for example. So let's look at small holding farmers and try to find good solutions for them that can bring them some livelihood and good methods, but also bring us solutions around food security and some good investment models. I think works both ways, if I have to say, extreme deep tech and very basic natural solutions. This is how we look at things.
No, I totally agree with Shirley. In fact, the work you have been doing, I've been a big fan of that because one of the innovations actually which I saw was in India, we eat a lot of sweets, right? We eat a lot of candy. And in all of them, there is a synthetic color, which is red color. And either actually, if you want to go beyond synthetic to typically like naturally available red color, I have to then actually kill and some sort of insect or some sort of organism. Again, in India, actually, like, being coming from a culture where, like, we want to be pure vegetarian. Anything which is coming from anything remotely living is not something fly with us. And you being able to create from, like, proteins and converting that into a beautiful red color, which is even economically more viable. It's something. No, I would like to understand what goes behind that mindset. That deep tech actually is behind the hood, but what you deliver is so simple and easy to understand and use, which makes like, potential market very effective. So how does that work? Do you have a team which are, like, one part is because technocrat, they have their own I would say mental wiring to make things so complex that actually normal people are not able to understand. But it's coming out with innovation which are very easy to use. How does that comes?
I'll give you, if I may, I will give you two examples of how
Sure,
we try
please.
to work with technologies. The most important thing for me these days is to look for real pains in the market. So we see more and more solutions looking for pains. We try to go backwards. We look at our partners, whether it's PepsiCo or other big corporates, on their wish list. What are the big trends in the market? And this is where we try to find the solutions in these labs of us. So for the red color, we know that it's about to be banned in Europe. It's already banned, R3, R40. In the US, it's about to be banned in 27. What can we do in order to change all these synthetic bad colors into good potential colors that for sure will be staying in the market? So we have this algae, and we do some work around gene editing with it. We insert the gene of the carminic, of the coccinelle, of the animal that really holds the best molecule in red color into the algae. And what we have is a factory that actually uses the water of the that comes out, the molecules that comes out of the molecule, and reuse it all the time. So this is cost effective. This use a very smart solutions around gene editing, and this answers a good pain in the market. When we have these three, we know that we can move forward. I have some more examples, but I want to give the stage to other, of course.
Sure. So I'll go to Mr. Arindam now. Sir, you have been a veteran in the industry. You have seen, like, many winters and many summers when it comes to AgTech investment. Now we had a bad winter. Now things are moving up. But at the same time, it is very important that we learn from the mistakes of the past and then we move in the right direction. Now, I would like to understand from you that how do you think that actually, like, going forward, that the investment directions would be in a way where they doesn't again go back to the old mistakes, and how do we make that investment in agtech sustainable itself rather than dependent on the cycles?
Well, Deepak, thank you for having me here. And I think you have answered the questions yourself by saying that, look, initially, the power of technology, everybody knew the potential of technology, but what it could actually do or not do was something we couldn't fathom in the beginning. There was so much of hype around technology. Now, over the last 5, 6 years, I think we have learned a lot, whether we are entrepreneurs, whether we are investors, or we are other important ecosystem players, as to what the promises and what kind of impact it can make on business, environment, sustainability, etc. And most important, how does one make money? Now, I mean, take the case of India. There was a time you mentioned, very positively about a lot of investment getting in. But if you were present at that point of time, looking at the presentation, these were all spreadsheets and very nice presentation, who were with entrepreneurs promising to change the world, change the life of all smallholder farmers. I mean, the promises were tall, and there was hardly anything that they had done. Hmm. So now the good part is we do understand, and I think all the stakeholders understand as to what works and what doesn't. That's extremely, extremely important. Now, having said that, uh, technology will play a very important role in a country as complicated as India, where there's a lot of information asymmetry. I mean, if you look at the number of smallholder farmers or the number of farmers we have, 140 million odd, it's just not easy to have organized value chains. It's extremely, extremely complicated. Technology does play a role, but as you and Shirley mentioned, technology is a necessary condition, cut down on transaction cost, to cut down on the risk of doing business. But then having said that, hard engineering, biotech is going to play a very, very important role. So investment in technology has to go hand in hand with real sector innovation, because ultimately, if we look at agriculture, whether the production process or the process of transportation of food and the distribution, it's a physical activity. We need to bring in efficiencies. We need a heavy dose of technology, of course, to cut down on the clutter, to give accurate information, timely information to the business stakeholders. But it's important that multiple innovations and interventions go on to ensure nutrition security, if I may use that term, for the millions of people to feed.
I totally agree with you, sir. And you rightly said so. In 2020s, early 2020s, I used to sit on board of one of the oldest and the largest AgriTech incubator in India. At the same time, I also delved into being a partner and a director in one of the venture fund which we co-founded. But by 2020, mid 2020, I realized that actually, when you're on the other side of the table and you see all these decks and all that, and someone who also 10 days out of a month is on field farms across the globe, I found there is a disconnect, right? The GMV, the numbers which were coming on, and I took an exit from both. And then in the Forbes, I was interviewed. I said there would be blood on the street, right? And that is what we see past 3 years. Now I will be saying that actually I'm totally, I would say, having 360-degree turn. I'm so upbeat about the agri-tech sector. You talked about biologicals. I'm seeing that impact on the ground. Farmers saying my plants are not absorbing protein, but using these biologicals, the availability of nutrients, the availability of nutrient has increased substantially. I'm already seeing that actually, in some of the countries, specifically, for example, a company called Inari, right, in the US, they come out with seeds which were extraordinary. They are using less water, they are using less nitrogen. So we have started moving in a right direction because the focus is now actually technology this delivers on the ground, right? And this is where my next question to you would be said that when we talk about the deep tech, unfortunately in India we are lagging a little bit on that. We are more on even if we see today a lot of hype and interest being shown on business model innovations rather than deep tech innovations. Where do we see that actually we should be able to do it and what needs to be done?
See, Deepak, again, we have to learn from international developments that's going on in deep tech investment, because firstly, it's something new. Second is a lot of investors find it difficult to understand, the actual impact that deep tech is going to make, what's going to work, what's going to not. Because if you look at Indian agriculture, you mentioned your disillusionment in 2020, 22, etc. See, agriculture can never be seen in isolation. So if we are talking of deep tech, I mean, whether we need space technology, remote sensing technology, we need, bioscience, soil and water, extremely, extremely critical for agriculture at the production level. Food loss. How do you address the issue of food loss and food waste, of course? But, there are multiple interventions which is required, and it requires very deep pocket, number one, and very patient capital. If you look at the countries which have succeeded so far as deep tech is concerned, I mean, they have access to, deep pockets and patient capital. And that's the issue. So this is where I guess in a country like India or in any developing world, you need to have blended investments where, there's a commercial element to it, and there's a lot of patient impact capital, especially the government capital, which is not really looking at return, but looking at the long term impact of agriculture, whether it's on our health, whether it's on nutrition security, whether it's on, adaptation, whether it is on mitigation, whether it is on food loss, etc. So there needs to be capital allocated to be able to address these things without actually looking at return. That's where the real investment in deep tech is going to happen. That's my personal view.
I totally agree with you. In fact, to government in one of the policy discussions, they have put 1,000 crores on the table, right, in AgriTech to be, and before that, the funds of the fund being given to VCs. And I said that actually it is not very smart policy. In case you want to invest this money, please invest directly into R&D setups, right, where
Absolutely.
you might not be getting any returns. If you are the government start putting money with the mindset of a VC, then I think we are not on the right policy. And I think this is where the things need to change. Coming to you, Emmanuel ji, you have been someone who has been always very careful about the risk associated with some of the investment, and you have been a vocal voice in looking for the profitability rather than actually just burning to get the people. Your initial perspective that how do we de-risk agri-tech ecosystem going forward, sir?
Yeah, so I think when I should preface that my comments would be limited to my personal experience, which isn't great. But when you take an investment decision,
By the
I
way,
think
sir, I'll just interrupt. Sir, your views are seen so positively. You are the most followed investor in AgTech in India.
thank you so much.
So with that as a caveat, right? I think your personal experience goes beyond the I would say thousands of books on investment. Please, sir, carry on.
Yeah, so when an investor looks to invest into an AgTech or an agri startup, a lot of the elements of risk should have been already checked. The boxes for that should have been checked out before putting the money, especially in terms of the acceptability of the product in the market, the pricing of the product, scalability of business. All of these are questions which should not remain only, spreadsheets or PowerPoint slides, and should have been well answered. Because putting money without these being clear is clearly taking huge risk. And the willingness to do that, of course, venture capital does take risks into unknowns. But when it drives growth at a scale where viabilities are still not established, then of course it's burning cash eternally without really knowing when the business is going to really turn around. And for resilience around these businesses, it's basically, I think, the bet that we take on the promoters, the capacity of the promoter to stay on course even when things are not going very right, to be able to have a long-term perspective on that, the ability of the promoter to raise capital, um, have the trust and the confidence of investors to bet money when it is required, when it's running out of money. These are all the issues that will sustain a business. Similarly, I think the ability of a startup to change course, to be able to modify the business, to uh, not stick to a particular approach, to be dynamic, to also build a team around himself that brings in diverse thoughts, brings in competencies. All these matter. So the risk element is mitigated more through the team, their approach, and their openness to change, which I think will make sustainable businesses.
It's a very well articulated. I totally agree with you. But at the same time, sir, don't you feel sometime, and my apologies, I've been getting a lot of, bricks for speaking out on this topic, right? Sometime actually, a founder who comes with a very clear agenda, for example, disintermediating a value chain, right? And then eventually he gets funded, and then actually the whole idea of disintermediation goes to being predator and try to become actually the player who become themselves intermediaries. We have seen with some of the blue-eyed boys, couple of them we all know who have struggled, and again They are on a treadmill, just getting 90% of CEO attention of raising fund rather than trying to solve the basic problem they wanted to solve. Do you see that venture capital also playing a role, that actually you put it on a treadmill on matrices, which actually eventually might add up value for the VC as a founder being a commodity being sold to someone else, but might not be actually eventually doing great value generation for the organization or the startup itself, as well as even the ecosystem?
Correct, correct. Yeah, yeah. So this is not a problem unique only to agriculture. Where you have capital, large quantums of capital promising to change the way business is run, and assuming that there is inefficiencies in the system, which really didn't exist actually. So the capacity to transform supply chains, bring more efficiency, bring down costs, transfer that value to the farmer. So these were the promises that were made. I think some of these were not, these were specious arguments. Actually, the traditional channels themselves were pretty efficient in doing what they did. And therefore, this did not happen. Capital in large quantities leads to market distortions, and not only in agriculture, but in other spaces also. Assuming that, in volume and other ways, it can be made up as the journey progresses. But the reality has been that the traditional businesses are much more resilient and capable of adapting also. So the traditional trade has also changed the way it does business, which is a positive thing, but startups have done that at a very high cost, and probably sustaining their own sustenance is called to question.
No, so interestingly, I was talking to a very young entrepreneur, and who tried to model based on some of the previous companies which have raised substantial capital. And he interestingly said that, Deepak, you invest in my company because I can generate GMV of 300 crores right over a year. And someone who is connected with all the Cargills and Olam and DT, advising many of them, I said, before you complete your coffee, I can give you 300 crore GMV sitting on this table in 4 phone calls. I have to buy from Cargill, sell to ETG, or buy from ETG, sell to Olam. I can give you 300 crore GMV, like, by end of, like, you'll complete your coffee. What is the USP? And he was not able to talk about it. Now, coming to you, Subhadeep, you have seen many such models, very successful, sometimes not clicking. Uh, Based on your such a diverse experience of working in this sector, and I would say that being a sometimes a very visible face in engaging with young entrepreneurs, I've seen you most of the time with the upcoming entrepreneurs rather than the oldies who have been there and done that, so-called done that. So I would like to understand where you see that the high impact but uncapitalized areas in AgTech, where you see that, like, the future investment can be put across.
No, thank you for the question, Deepak ji, and thank you for having me at this, and lovely to see, old and new faces around. Sorry. I think one of the key areas where we all, I think, have seen the last 10, 15 years of Indian AgTech evolve, has been that a lot of capital has, I guess, gone into what we can say distribution, or maybe enabling more distribution, enabling more disintermediation, whatever. If you ask me where are the next really meaningful modes of pools of capital that can go, in fact, some of them have been outlined also earlier in the call. I think there's a lot of potential in looking at agri waste properly, into the monetization of agri waste, into using it, upscaling it into higher value materials. It could, again, to Shirley's point, it could be something which is very high on the science spectrum, or it could be something ridiculously easy and almost biomechanical in nature, but there's value to be captured there at both ends, right? So the whole bioenergy wave, the whole waste to value, I think, is an incredibly important space. The other critical area where I think capital will be needed in the next 5 to 10 year horizon specifically will basically be where we're seeing resource inefficiencies. So, for example, we're seeing a lot of our soil quality really, really crashing, right? Nobody is talking about it too much today. But for those who spend time on the field and interact with farmers, I think that is a alarm bell which will really ring off very heavily in the next few years in India. So can we try and find solutions to preempt that a bit to the extent possible? So again, indexing on models which are, you can call it regen ag, you can call some other incentive, but essentially, how do we take care of our soil and water better for ag? I think that is going to be a very large, and it has to be a blended pool of capital. It will not alone be VC capital. It will also be private sector capital. It will be public sector capital. But in terms of underfunded areas, I would still say that that's a massively underfunded zone where more work needs to happen. And the third area, I think, frankly, is also around how do we get better with our, uh, I would say, post-harvest universe. That is still, I think, one of the areas where we have seen a lot of support, maybe a lot of public support, public fund support in India around infrastructure creation, post-harvest, and better handling, better logistics, lesser food loss. But I think that's still lost in translation. If you ask me from an impact perspective, there are still models which can work with whatever we are growing and provide retain the value in those produce. So those three are definitely top of mind. The fourth one, which I think all of us are excited slash skeptically excited at some point in time, is the whole area of how will this agri stack play out, right? And does it then open doors for more and more startups to have a role to play as the larger infrastructure, the digital infrastructure gets built out. And I know this because the government is focusing on now doing the baselining for AgriStack in many states, doing the farmer KYC required so that your land records are updated, so on and so forth. And does that then open up institutional capital flows towards agriculture for beyond what it goes today? So can we move beyond the KCC or other means, and can we look at more intuitive financing plays for farmers or group of farmers? I think that is an incredibly powerful and deep area where capital flows will be required for the next maybe decade or 2 decades also will fall short. Those are, I think, to me, I think the 3-4 areas where we see more and more capital go in addition to maybe what has been said so far, at the risk of not repeating myself.
No, I totally agree. The agriculture waste, I think it's a humongous opportunity. And see, the old school of doing it, just burn it as a biomass. I think we have gone beyond that now, and the new technologies are coming. Whether we talk about ethanol 2.0, India produced close to a billion metric tons of cow dung, right? And 500 million metric tons of non-use agri waste, right, which is not used for fodder. So once you are having a resource which is 1.5 billion tons, right? If you are able to convert into right sort of value, and whether you are not just looking at it as something which you can burn, I think it unlocks a lot of potential for a country as an economy itself, right? It can contribute humongously, right? It can become a multi-billion dollar industry overnight for sure. And I totally agree with you. And with the climate consideration also, if we are able to take care of it without burning it, right? Which farmer eventually is already doing it. Only difference is that you want to burn in a boiler, he is burning on the field. But like if you go beyond that, there is unlocking of a lot of carbon credit as well. So I think that can also, as you rightly said, blending. And also, I totally agree with you where we talk about the agri stack. So fortunately, I was the part of the initial discussion team who created the concept note called idea on which this agri stack is there. For a long, nearly 5 years, it was on slow burner like Bilbal ki khichdi. But now, past year or so, we have seen that it getting all the. In fact, after the last budget, where the honorable finance minister talked about it, and we are seeing a lot of impact coming on that. I would like one more intervention from you. How do you see the climate tech funding in India? Because that is also a little bit of, I would say that we are seeing dip up and down. So is it that more of the Me Too type of movement where people want to invest, but at the same time they're confused, or actually we really see people serious about it?
So again, I'm probably quite new to, if you call me like an ardent climate tech guy, I'm still my universe is agri, food, climate, all in the same sentence. So I see all three together and not in isolation. But with that caveat, I would think that we still are in its infancy. Very frankly, I think we have seen energy And within energy also, I think we've just seen how solar has built scale now. So within just renewable energy, and that is one sub part of renewable energy. Um, Everything else, whether it's energy transition, whether it's adaptation also, I think there are a handful of companies now which are finding some scale, let's say with the carbon markets, which is encouraging. But I think for the size and scale of India, we're still very early. If I look at the whole biomaterials, if I look at the whole, that part of the climate universe, if I look at better energy and energy efficient products and all of that, I think we're still early. A lot of work is happening. From a funding universe, I think there's a lot of late stage capital available, for sure. So there is enough of private equity, infrastructure focused capital, which is definitely available. There is a super early stage gap at the stage at which, let's say, what we are trying to solve for at WMI, which is in the pre-seed and early seed kind of stage where you're building out these businesses and going over that proof of concept and all of that things. But I would think that a lot more focus see, the problem with most of these businesses are that the nature of spend required is sometimes capex, right? Many a time. So after you've proven out your first maybe plant, you then need to move on to your next bigger plant and then where do you finance the $5 million from? Which ideally should be a term loan. But then founders have to kind of move towards funds and funds have to look here and there. So I think as some of these prove out their economics better, unit economics better, we'll see more financing flows head in that direction. But to me, that's a gap, right? That 5 million or that 3 million to $10 million gap where companies need that first jump after having proven out the technology or the subscale plant and all of that. That jump is what is kind of missing. So, but it will get filled in a matter of time. I think over the next 5 years, people will see the base economic merit itself. Jargons or calling it climate tech versus something else, I think that's the nature of the market. It'll keep on changing. It could be sustainability, it could be something else. But the net thing is that can you be more resource efficient and capital efficient with business overall, right? I think that's the underlying crux of success for any of these things to work out. That's my personal take, at least.
No, I totally agree. But sometimes when you raise term loan, you don't get featured in your story. So that could also be something interesting. Coming to Shruti, you have been someone who have been having good experience in putting money in early stage fund, and from you also we would like to understand what are the, I would say, fundamental gaps in agriculture economy of India, where do you see the next big opportunity, and what are the misconceptions actually sometimes we have as a founder or as an investor when we approach Indian agri-tech sector.
Hi Deepak, hi everybody. Thanks for having me here. So yeah, I think within the AgriTech and the broader climate tech space, there are several themes that try to be force-fitted into conventional VC speak and conventional startup ecosystem speak, and that kind of distorts financial expectations as well as how the company will ramp up. Probably at the top of that bucket would be agri-waste valorization itself. Subhadeep also touched upon that. Here, particularly, folks think that there's such a massive shift that is happening, both in terms of energy as well as new materials, and there is a massive resource pile that exists in the form of agri-waste. And it is perceived as having low or negative value. What often folks misunderstand is, one, feedstock is cheap and abundant, which in reality is not the case. There's a seasonality, there's a geographic dispersion. Given the density or lack of it, it is costly to aggregate. There are variabilities given that it is a natural waste product, and all of this can significantly distort production economics. So that becomes a misunderstood part. There is also often the misconception that policy incentives or carbon markets will fix this, which will not hold out for long term. it actually makes the business very, very fragile. That said, it continues to be an extremely compelling proposition. Large buyers need low carbon feedstocks. We talked about this massive shift that's happening in both energy as well as new materials, and there is a large resource pile that we have here. What we as investors would like to see and what we'd want founders to pay attention to is feedstock control is important. It is important to have economics on upcycling, on value unlock that actually start to make sense both for the farmer as well as for the producer. And I think the most attractive outputs in this space would be those that have non-speculative, stable demand, that are serving industries such as construction inputs, packaging, new chemicals. So we have a couple of companies in that space, for example. And the second category, which I think is widely misunderstood, is carbon markets themselves. Here again, there is a massive misconception that this is going to unlock more SaaS type revenue if you have a very cool DMRV tool, but that is not sufficient. There's certainly a lot of value that Indian agriculture can generate through soil carbon and through regenerative practices, but the measurement, trust building, transaction costs, all those become binding constraints as well, and that kind of gets exacerbated by our fragmented land holdings. This is, the business is likely to have economics and a ramp up more similar to infrastructure projects. So the compliance is important, long cycle finance is important, and it's not your typical quick software revenue type of business. And that's something that I think investors and founders should continue to keep in mind. The third that I feel also sees a lot of misconception is agri-biotech in general. People either think that it is, such a magical novel input and it's just going to work wonders on its own, or they think that it is just too early science and it is not going to scale in India. The reality is somewhere in between. You do need products that are strong enough to create a technology moat and unlock the outcomes, because at the end of the day, the farmer will pay for the outcomes. But the innovation alone is not going to cut it. You will need to think through distribution. You will need to think through moats that can actually compound trust as they go along. You will need to be comfortable with the agricultural cycles themselves. That is not going to, compress. If a tomato is going to take X amount of time to grow, it will take that amount of time to grow. I think these three would be top of mind themes where there is a lot of value to get unlocked. What some of these misconceptions and tripwires need to be kept in mind.
So, Shruti, typically all the three areas you talked about, the policy plays a very important role in these areas. So first of all, let's address the elephant in the room. We talk about agri-waste, right? So government came out with a policy for a CBG, that is compressed biogas, and they give incentives that actually we'll keep our eyes closed for a liquid organic fertilizer organic manure, as well as if you produce CBG, which you are able to sell, we'll give money for that also. Unfortunately, you'll be surprised. I had opportunity of working with two large companies, right, who are in this field, advising them. In fact, the first plant which was made under this scheme, I was requested by the government to visit and find out actually how to take care of the lagoons. They ended up doing it, but then actually there was slurry lagoons, right, which started creating a social unrest in the area because those lagoons were leading to mosquitoes and disease, and all the environmental value got defeated. Now, how do actually, as an investor, right, address on the policy part of it? Because industry can still engage, but for the VCs, investor to engage with the government, that's a challenge. Secondly, you also talked about biotechnology. I totally agree with you. Again, you are seeing that the heavy-handedness, good or bad, industry can always debate. We had multiple roundtables on that as well. But even that, is impacted by policy a lot. Suddenly, something which you could have put directly in the market without much of problem. Now you have to go in for agroclimatical zone, get the tested. You add up costs, and the delays of putting the product in the shelf by close to 18 months. How do you, like, as an investor, see the policy, like, environment, or engage with the policy makers?
So engagement with policymakers, in my opinion, is it's table stakes. It's also something that is going to be slow. So industry and financiers collectively need to engage with policy on this matter. What creators and innovators need to keep in mind is policy in most of these high public interest areas eventually helps the high quality innovator. So if I take the example of the biotech inputs themselves, the space was so negatively distorted because of the various wide variety of products that were masquerading as biologicals. Right. And so the people who were creating genuine high outcome, high certainty products were not able to differentiate, and hence they were not able to crack that distribution. It required them a lot of money to do the advocacy and help the farmers understand that, their product was different and actually high integrity compared to the 5 other, 20% priced things that were sitting on the shelf. So the regulation in that aspect will actually bolster the industry because you will have better quality products that come in. And those products will also be able to create as well as capture the right value there. Similarly, when we come to agri-waste, policy can only be an enabling support. What policy will not be able to do is override unit economics. It can give a push to a certain degree, but if you actually want large scale impact and adoption to happen, the economics will need to start making sense, which means even in the case of CBG, your yields will need to matter. Folks will need to rethink reactor design because this was the current design that is used for CBG takes root in the same design that was created to make it a waste management exercise and not really a fuel enhancement exercise. So you will need to rethink reactor design. You might need to rethink catalysts and figure out what is, the yield that makes sense from an economics perspective. You might need to think of liquefaction at the source level to make transportation easier and basically make the landed cost better. Policy will only be an initial enabler. At the end of the day, economics will need to work.
I totally agree. In fact, I was surprised that now many of the plants have started using and growing, right, alfalfa and napier grass, right,
Yeah.
to create CBG. So that's unfortunate reality. Going to you, Arindam,
But that's the
we
only one
talked
just
of,
by passive right? That's the only one where you can actually make money.
so, but I'm saying that then it defeats the purpose of, why
It
it was
defeats the
created.
purpose. It gets into your classic food versus fuel debate.
Exactly. So, sometimes the solution is become more dangerous than
More
the problem
dangerous.
itself,
Absolutely.
right? So, Arindamji, actually, in coming back to you, we talked a lot about sustainability, but while on discussions, on panels, on presentations, it looks a very glamorous topic to have. But do you see that really, there is a interest or there is a concentrated investment coming in this space, or possibility of investment coming in this space?
Uh, Investment is definitely coming in, but it's not enough, and I don't think it's going to be enough. And that's a reality we have to live with. A couple of things here. Sustainability, again, we use a lot of terms. Sustainability is one of the broader terms we use, and it's very, very complicated when we talk of agriculture sustainability. It all starts in the field, from the production all the way to consumption. There are multiple issues. And, first is technology is again necessary. I think that's obvious to all of us. Otherwise, there is so much of, information asymmetry, disinformation, how to any actor or any player to be able to take the right relevant actions for sustainability is a big question mark. Without technology, I don't think it's possible. But will the investments come in? Again, the point that Shruti made, see, ultimately unit economics have to work out. There needs to be a commerce behind it. Just because something good is going to happen to the planet, to the environment, private investment is not going to kick in easily. Again, the point I made earlier, blended, which is extremely difficult for government capital and private capital to work, private capital seeking its own commercial returns, while the government is looking at more sustainability, climate kind of impact. Uh, we still don't have enough of that. If you look at the gap globally in India of what kind of investments is required vis-a-vis how much investments we are making, the gap is humongous. And the question is, where is the money going to come from? Again, blended finance, it's again another hyped term because building up this blended finance solution is extremely complicated, time consuming, transaction costs are very, very high. The aim of different sectors, whether it's the development sector, the philanthropic capital, the government, and the private sector, they find it extremely difficult to engage. But to answer your question, for the investments to come, it needs to be commercially viable for the investors. Investors are not going to put in private capital for a problem which is more generic and public in nature without any line of sight of when and how to make money.
No, I totally agree with you. So for that, we'll go
And
to Shirley.
another
So,
point, Deepak,
yeah,
if I may
yeah,
add,
please,
and that also
please.
reflects a lot of things which have been said. See, we are talking of mostly of private investment so far. See, private debt has to play ball with that. Huh? A lot of ask from the entrepreneurs, from the tech companies is equity capital to meet your working capital or other kind of investments which debt can be taken care of. We see a lot of fuzziness around that. So debt has got its own role to play. It needs to come in given a context, but that gets very confusing, and we don't see the two different pools of capital being able to engage and to be able to find the businesses where they can go hand in hand. The second issue, whether it's sustainability, whether it's inclusiveness, whether it's climate, private capital, you know, has been spent, has been burned in creating public goods. And that's not the work of private capital, as per my uh, opinion. Somebody mentioned about the AgriStack. I think Subhadeep did. Now, who's responsible for it? I think the government needs to create it. I mean, private capital trying to build up their micro stacks, and it becomes a huge confusion in the market, right? So, I mean, we are now understanding better what private capital should do, can do, where it can get it returned, where government should invest. But frankly, inefficiencies in both the system is leading to issues, including investment in sustainability. And it's
So,
becoming, the other point is it's becoming, whether it's carbon, whether it's sustainability, it's becoming very political in nature now. And we have seen that in the last couple of years, a certain political stream doesn't believe in climates. A certain stream thinks it's the most important thing that's going to impact us. So, the regimes change and suddenly, you get a situation where the focus on climate or on sustainability completely changes. So that again leads to confusion for capital and huge risk for capital to be deployed.
no, I point very well taken. And sir, those regime which think that environment and climate is not important, please put them for 24 hours without any mask, without being in the room in Delhi, and I think they will change their minds for sure. And
Hey, Deepak, again, your statement, Delhi, they'll say, look, where we are, it's not Delhi like environment. We are fine. Huh? So Delhi is an exception. You take care of that. So,
and the secondly, you very interestingly point about the working capital financing. Now, I would also bring upon a point which is a little bit tangential. Sir, I have seen some of the large players, I would say entrepreneurs or founders of the companies, because they have access to VC financing. They take VC financing and they start deploying that in trade financing, right?
that's the point I'm making too. It's very,
Yeah,
very inefficient. Huh?
yeah. So typically VC is not giving you typically risk capital to generate 10% return on investment by giving loans. And that has also happened, and the VCs are fine with that. Now I'll move to Shirley for you have been someone who have been investing in the technology which you believe are commercially gonna be viable. But solving some of the key deep-rooted problem, but with a long curve. How, as an investor, right? Initially, you are able to decipher it because I'm getting into something which is going to take 4 years, 5 years, but at the end of the tunnel, like the light might not be there. So, how, as a smart investor, you are able to do that?
I think it's the right point to address at this point, and I think all the educated panelists really touches many of the issues that we have around agri and food technologies. But how can we really tackle the issue of the financial models of agri these days? And I believe that it first concerns the management of expectations with different kind of stakeholders and investors. Yes, we need to be patient. Yes, we need to look at the market as, different kind of markets than the one that we see in fintech and cyber. And, when I see VCs and private equity looks at the ROIs that are not in our table, I really suggest to connect them with my colleagues in different sectors and not ours. But I also think that there's a responsibility for us to look at financial models and try to break the normal way that we work. And we try to do it also in DeserTech. And the way that we do it is that we build a platform that is supporting the early stage innovation without building the normal, let's say, the normal format of a startup, right? So investors, because we are looking at risking at high risk, investors are saying, okay, the technology is high risk. Let's put our money where we can see good teams. Good teams are important. I'm not the one that will break that. But at the first stage, let's direct most of the funds to the technology itself. Our platform is pushing the technologies with a very experienced team, but one team that will look at a few technologies. So we try to build the normal model, to rebuild the normal model of a startup. We don't want to go to investors and say, listen, we have this amazing CEO, amazing CFO. No, it's not needed. What's needed now is most of the funds go to research and technology. We have the best technology. We have lead scientifics that are amazing, and this is where we put our funds in. When we see the technology is getting there and being more mature, and we validate the technology, this is where we come and venture build the company around it. So the spin-off would be in later stage, and in this way, we try to build a very lean model of startup. And we see that as critical to investors, because at the end of the day, investors are not investing in beautiful decks, in very smart teams. They invest in the technology itself. And this is how we try to de-risk our model in one way. The other way to look at it is, where is the real benefit of the startup? Where is the strength of the startup? And we believe that not always in the GTM. It's, of course, go-to-market is the most important thing. But if we work with knowledge partners from early stage, like the big ingredients for, companies like Givaudan, or big clients, and they are our reference to the market. This is where we can come and say, okay, our exit points or our big ROI is not when we sell in the markets in billions. Our exit point is where we validate the technology and we can spin it off to our collaborators in the market. So my way to do it is promising my co-investors to actually exit the companies in 5 years, just when it gets to the market, not after we validate the markets with billions of sale, but much before that. And I think this is a new model that works well with these high-end technologies. So imagine the journey that we built. We support the technologies. 80% of the funds that we support go to research. we give an umbrella support of, all the soft skills, right, in our platform. When technology is validated, we work with knowledge partners and with market leaders to pilot and to work with them on the validation on a big scale. And when we have these two, we are starting our journey of exit. And again, we used to say for many years, rhinos, not unicorn. When we look at this kind of technologies, yes, we don't always go to IPOs. This is not always billions of dollars exits. We look at dividend companies. Everything that we do at the end of the day is mass market, whether it's tough grass, cotton, seeds, water solutions, ingredients. Everything that we do is built on working on massive markets. And this is where we say, okay, our investors will enjoy, not only them will enjoy the work that we do, their children, grandchildren, grandchildren will be able to enjoy the dividends of this company. And so it's business model, financial model that is a bit innovative, technologies that are, I believe, top and really the right ones, and working in the markets that really are able to absorb our technologies in early stages of the journey of the companies. This is our solution. And of course, at the end of the day, we talk about everybody spoke about, I believe, climate in different ways. We work in the region, right? So we work in the UAE, in the MENA region, in Africa. We see how desertification becomes a huge thing. And before that, we never had approaches coming from Europe. But now, Italy, Spain, Portugal, everybody comes to get solutions from us because it is very clear that this is going to be one thing that we need to approach specifically. How can we tackle the issues of desertification and arid areas with our technology? So this is the second maybe different way that we bring to the table within climate in general.
No, sure, Shirley, you're very, very rightly put points. Business model and financial models are very important, and even investor has to innovate that. It's just not about tech innovation by the entrepreneurs. In fact, I was in the COP28 and I had a good discussion, and after that, a lot of money was allocated. Close to $200 billion were allocated. And recently, I had the possibility of meeting one of the ministers who was spearheading it from Dubai itself, and I asked Her Excellency that the money is not flowing. And but a lot of commitment, money is not flowing. And she said, okay, fine, tell me 5 proposals which came to us and we didn't fund. Right.
So
So
you can
sometimes
find
we
this
are
proposal, by the way.
no, that I'm saying. See, this is where I'm coming. I know actually. So this is where sometimes what happens is that we blame that actually money is being not invested. But end of the day, if somebody writes that I'll be investing $200 billion and allocate the funds, they are not gonna just be putting it something which they don't feel it is serving the purpose. So in fact, like right, the proposal is also important. That brings me back to Emmanuel. Emmanuel ji, like again. Uh, well-intentioned but investable, right? Whether it is from fund coming from COP or coming from VC or coming from debt, right? How do we differentiate that? I can have a great intentions, right? That I want to save cows, that's fine. But if I say that actually I want to create fund which will stop slaughter of cow across the world, it is not investable, right? So I think how do we differentiate that actually good intentions are one part of the game, but end of the day, to make anything sustainable and stay, as rightly mentioned by Shirley, that my grandchildren should be able to get dividend out of that. How do we differentiate that in your view?
There are a lot of problems that are not fundable with commercial capital. They're good problems and need to be resolved, but they're not great businesses. And those are the ones I think primarily have to have the role of the state and being led by the state. And there could be solutions that are not affordable until they get to scale. And even for that, to promote those solutions and technologies, there requires to be some kind of a state subvention or some way to promote that. So all these need just more than the kind of commercial capital that VCs and others bring to the table. And in that space, I think while evaluating at the time of taking a call on investing, we do make certain assumptions about policy, that being a conducive policy, the state supporting the thing, the general end users understanding the benefits of what is being proposed. Uh, Often, of course, the externalities also are monetized and considered as cash flows, which really are not paid by the end user. The benefits go beyond the user themselves. So all these kinds of businesses may not be appropriately invested by pure commercial capital. There could be blended capital that could support it. There could be policy initiatives that could make it viable to be implemented. And there could be programs that only the state can do and are not really the domain of the private capital to go into.
Perfect. Coming to you, Shruti, the similar question, we have seen that there is humongous pressure once a founder get funded by a venture capital, right? And at the same time, he want to create a resilient business in a slow-moving sector like agriculture. How do you suggest a founder should balance it out, or even an investor who is invested? How do they balance out that actually, the targeting right metrics rather than targeting just the growth and the fastest possible exits?
Sure. So there is, the mandate that VCs have about compounding the capital with a certain return profile that they've promised to their LPs, and then there are the ground realities of how agriculture truly will, scale. Uh, in my opinion, it's not that AgriTech is slow, and it's not that founders are lacking ambition. Um, Trust, biology, and cycles here cannot really be compressed, right? And so, uh, instead of trying to force fit a SaaS type of growth or a platforms type of growth onto systems where you have to take into account seasons, soil, stakeholder, everything. It is important to assess companies in a way that you are thinking, how does the company grow in ways that compound instead of just thinking about growing fast? At the end of the day, that compounding is going to generate the same type of returns profile. You'll just not see 30% month on month growth for 6 months, but you will see massive unlock happening by year 5. And in that sense, there is, an operating shift that VCs will need to um, think of, and founders will need to think of as well as they build. What it also means is that, while your agricultural growing cycles cannot be compressed, you can actually compress your learning cycles. So, founder selection basis, how fast they're able to internalize early signals, um, you know, how they show discipline. So it's better to run, for example, multiple small pilots that are more representative of a wider sample set versus one big rollout. That becomes important. Measuring actual outcome metrics instead of just vanity metrics, that becomes important. Figuring out where high value use cases are right at the beginning, that becomes important. So aligning growth with areas where incentives, outcomes can get aligned, that is very important. And it is something for both VCs as well as founders to take note of. It is also important to remember that this is a business. Anything in agri will get built on trust first. Scale happens because of trust. If you end up scaling too rapidly without ensuring that there was trust embedded in the beginning, you will end up with what is often called bad scale. And then challenges start to happen. Eventually, the companies have then, met with survival challenges as well. I think also important to remember that subsidy can just be an early tool and lever of support. Economics need to work for everybody in the stakeholder ecosystem.
Couldn't agree more with you. Subhadeep, coming to you, again, uh, speed of scale to a resilient business, right? What matters? Because now we are having hindsight of close to say 12 odd years or 13 odd years of Indian agri-tech, evolving. And we have seen all type of cycles of growth, cycles of FOMO. How do you see, as an investor, which sort of metrics you should be looking at? Because speed of scale, and I'll also add Subhati for something which you would have seen, this we got into the phase where suddenly in 5 years back we thought all the AgTech, because of technology, they can become super companies, full stack. We'll do input, we'll sell output, so we'll be better than Bayer and BSF in input, and we'll be better than Cargill's and Olam in selling. And while we ourselves we are tech players, so definitely the tech is our game. And that models we have seen that it is flattered more than anything else. Now, how to as an investor you decide where, because investor plays a very important role in guiding, directing. Because founder is one time or second time founder might not be having that body of work understanding. But Shruti also mentioned about it, founder understanding. Founder understanding is limited. We know that actually, if he's a serial entrepreneur, then it's different ballgame. But generally, 90% of our founders they are first time founders. How, as an investor, either you handhold, identify them, because you are not a training institute, or dump them, forget about that. This is not worth investing.
So I think entirely depends on how you choose to work, right? What your operations model is there. But at a generic level, like Shirley was explaining, how they venture build with high technology ventures. Our approach is to kind of work with founders from scratch as well at Wavemaker Impact, where we are selecting these second or third time founders. These are typically not your first time founders, but these are founders who may have built in different sectors, but at least have been entrepreneurs, have seen scale, and have built businesses and teams. And now are choosing to do so in harder sectors like climate and agri. Right. And then we work with them from scratch, literally as a co-founder from the beginning. So that's one way of working. Where what we're trying to say is very simple, that here is a very limited amount of capital. Please take extreme calculated amounts of risk. If something has been proven out already, don't try and go and prove it all over again. Right. And there are faster and smarter and lesser cash burning ways of doing business. So focus on that. That's kind of our approach at Wavemaker Impact. That how do we look at profitable ventures which can also scale faster than an SME? So think of, in an ideal world, what we'd like to see in a lot of these spaces are SMEs which can move very, very fast, right? So that is another alternate definition, right, which we can give. But to your point, to the larger point as to how and again, these are cycles. Like if there's excess liquidity, then is bound to be misaligned incentives, and everyone will lose the plot. Whereas if there's extreme dry period, it will also then at some point it will stifle innovation as well. If the extended dry period goes on for very long, it will make all of us extremely, extremely inward looking and overcautious, and then we'll stop innovating as a result. So sometimes it's a fine balance of overcorrection or avoiding the overcorrection trap. But if you ask me what I think makes sense, I think just going to the fundamentals, that one thing for sure is, and I can hand to heart, I can say that most entrepreneurs that at least we're engaging with now, what I'm seeing, the base unit economics, the core fundamental unit economics are positive from day one, which is very different from what was 5 years ago or 2021, where even if it was a negative gross margin story, right, where your basic unit economics were not hitting, people were like, fine, it will at some point work, right? That approach people have, I think, learned, and I don't see anyone building very recklessly around that. Or if they are, maybe I'm not aware. So that's great. In terms of the other thing is, and I guess one of us made the point that this is also a space where you're not supposed to, most of the businesses in agri-tech aren't supposed to scale the same way let's say a WhatsApp will, right? Or OpenAI is scaling, right? It does not lend itself to the same time period scale, given that it's a biological process, it's a seasonal process, it is geopolitical in nature, it is very community led in nature, and none of that is going to change. So I think from a time expectation perspective, my only thing to entrepreneurs and founders are just think of it as a long haul. This is not a 5 year flip business. This is not a, hey, grow for 5 years and then suddenly you're big enough. This is a 10 year compounding business. This is a 12 year compounding journey. And then you automatically will be able to pace yourself, right? Early years, 3x is great growth. Once you have a base of, 50 or $100 million of revenue, growing 3x is going to be impossible. You will break at some point, right? Doing that. So that is what we mean by like at some point, your unit economics need to be very, very strong, and you need to start looking at how do you use growth, debt for growth instead of just equity. Like honestly, only depending on equity for growth is not what agri-tech is. This is also not a land grab kind of market. I don't think we will see in agri-tech one player which is monopolizing the whole sector. From a capital availability, there might be winners, but from a market demand perspective, there will not be you'll not have dearth of demand, for example, right? If you're not there. So
I totally agree. Don't think it 369, 3 months pilot, 6 month scale up, 9 month either close down or go to the next level. Right? Doesn't happen in agriculture. And especially like, I would also request all the founders who want to get into agriculture, please before getting into it, 3 months do show the yatra. Right? Be on the ground, understand the pain. Then you'll understand how easy, how difficult it is. Shirley, in the last round, in brief, what is your expectation when you create technology for the world, right? And where do you see India fitting in your scheme of things?
Well, I actually see the multilateral journey that can happen between the US, UAE, Israel, and India as a very sustainable one. And we see India not only as a huge consumer market, but also as a huge producer, specifically when we look at agri. So for us, investment-wise, look at the journey of innovation, right? Technology can come from everywhere, but we do look for very strong technologies, and we know that we can support technologies from our network around here. Then when we look at investment, we see the UAE as a very huge player around this, and it becomes more and more the funds become more and more available as time passes. We also see the potential of the US joining this celebration, and we see more and more investors around our sectors coming to the UAE specifically to build their business and to invest together, co-invest with Emiratis companies and Emiratis, I would say, sovereign funds. And then after the technology is valid enough and mature enough, the potential to take it to India, investment, but specifically production and simple trade is a huge thing. And of course, as a consumer, So we see India and Africa as two markets, very different one. India more sophisticated, Africa as a consumer, but altogether it's a journey. The innovation has a journey, the agri has a journey, and our potential to bring all the countries and to build an ecosystem around the innovation itself makes a lot of sense. Of course, we look at specific issues that India is having pains around it and try to solve it. Definitely, food waste that was mentioned before that. We see also the potential of energy and how we can work on that. And smart materials, that's for sure something that we want to look at when we come to agri. So materials, any biomaterials that we can bring into the table and really change the game around how we look at the traditional agriculture is for us opportunity to bring to India. And we see also I have to say, we see it here in this panel, but we also see it when we talk to partners. the alignment also about how we see agri and food technologies. We see a lot of alignment between Indian investors, markets, partners, and the partners in the MENA region, UAE, Israel, etc. I will also have to mention that we have seen some beautiful cases of blended finance happening in India that I didn't see in anywhere else. I got to meet Manoj Kumar, who has built a beautiful business around smallholder farming in his foundation, and then the coffee business that they have around Aruku Valley. It really shows that India has some track record in this other end of regenerative ag, blended finance. It happens well there, while we see it as a success story that didn't happen in anywhere else. So I'm looking forward to learn, not only to bring technologies and to collaborate.
Same here. Looking forward to learn from you as well as, and let's work together. I think you two can work in agriculture extensively. Coming to you, Emmanuel ji, again, Shirley also talked about blended financing. Uh, how do you see blended or non-blended, the patient capital coming in? What needs to be done, right, to ensure that more patient capital flows in?
Yeah, that's interesting. Shirley has mentioned that she knows about the success of blended finance. So in the last 2 years, considerable amount of this kind of blended finance structures have worked in agriculture. More than, I think, 25 to 30 transactions that I know of have happened. So getting equity in all, maybe about 200 startups must have been equity funded in India, but there would be some 2,000 to 3,000 other businesses which are doing well as well, but don't have the kind of capital and may not be the right candidates for equity as well, where blending either grant or CSR funds with debt has helped grow these businesses successfully and scale them up very well. Lots of profitability, and although this grant is given to cushion the risks, to de-risk the business, in most cases there was no need for us to dip into that grant or equity, and it became part of the capital of did we did I get locked out, or all of you?
Things happened. Difficult to explain.
Yeah,
Technology
something
brings this issue.
Zoom did something funny, logged all of us out and again
Logged
bring
all of
back.
us out
That's
and
fine.
everyone's back again. So yeah, all good.
Yeah, please.
Okay. So, using
Your speech was so powerful. Actually, the Zoom got into act as well.
so using small quantums of capital from CSR, we've been able to unlock debt of a large, leverage it 4 to 5 times, and build very successful agri businesses. I think that's a story to document over a period of time, and it can be multiplied tenfold in the years to come easily. And it's seeing good success. And VC money isn't the right formula for many of these businesses, which are more, as Subhadeep was saying, MSMEs, in the nature of MSMEs, who can grow with debt and on a steady pace.
Perfect. Now going to you, Shruti. Shruti, your final comments on how do you see or the ecosystem need to look more at the climate as well as the resilience part of it, sustainability part of it going forward, because that is a need of the hour. At least I see when 94 cities in India are among top 100 most polluted cities, and agriculture has some role to play in that. It's a necessity, and how do we ensure that the necessity is taken care by the availability of right funding, whether in form of debt or equity or blended?
Right. So I think step one is for investors to translate the social impact into what is the economic impact and adversity being created. That is usually the first step to attracting capital, because they start to see the value unlock that is possible. So when we look at pollution, for example, there are productivity hours lost. There is a healthcare burden, often a perpetual healthcare burden, and hence, interventions that can actually counter pollution will actually be seeing consumer adoption and enterprise adoption, because there is a genuine value at risk that is going to get mitigated here. Secondly, there is the need to understand technologies and what technologies can really do in mitigating, whether it is large spaces, air purifiers that can work for large spaces at a much lower per cubic feet cost, whether it is and new kinds of allergy medication, or even like respiratory nutraceuticals. Similarly, value chains that can absorb agricultural waste and kind of prevent incineration, which is often a contributing factor to the pollution. All of these are levers that are also going to create economic value, and that is what investors would tend to seek. So, making the connect from the social impact to the economic impact becomes an important first step. Secondly, there's the need for a complete capital stack. High stakes venture capital can finance the journey from TRL, say 6 to pre-commercial. You will require policy and philanthropy to put in R&D capital that can be that is grant like in nature. And then as the companies and the innovations scale out into the market, there will be the need to build in debt capital, working capital support, basically look at the entire balance sheet in totality and bring in the right kind of capital when it comes to scale.
Perfect. Over to you, Subhadeep. Your views on how do we see learning of to ensure that we don't repeat our mistakes going forward and be more resilient.
So I think some of them were already, I touched upon it the last time. But fundamentally, I think somewhere there is a merit in keeping the customer and the real problem very, very clear, like spending more time on that, as at least in the initial foundational parts of any business. If your value proposition is very real, if there's a genuine value creation that can happen as a result of your technology, process innovation, whatever, go to market. I think that is the need of the hour to really double down on that part, right? And that is how everyone can collectively go back and build more confidence that, hey, this works and this is how it can scale. So it is, again, going back to fundamentals. Your best, again, for an entrepreneur, your best source of capital is actually a paying customer, right? That will never change. So as long as we as investors also understand that, and end of the day, we also do underwrite that when we say that things need to scale. At some point, like Shruti said, and it does need to make economic sense. Green premiums cannot, for example, support you beyond a point. So I guess the idea is to kind of look out for those much more early in the day, as opposed to realizing 2 years later that, oh my God, there isn't any real value in what I'm doing, right? And I've raised so much capital, and I've hired a large team and things like that. So keep it very lean, both your cap table and your team, till you're very sure of the value prop. That is, I would say, my single biggest takeaway for the next few years. Yeah, or generally also.
Couldn't agree more with you. Revenue is the cheapest form of financing you can get for your business. In fact, you'll be surprised. I put on my visiting card, it says Rainmaker. So a lot of people ask, actually, it is a concept in the West which says the person who can generate revenue for you is known as Rainmaker. Have been Rainmaker for quite a few startups, as you know. Coming to you, Arindom ji, last word to you. Right, what are the structural or governance challenges you see to have large scale deployment of investment in agriculture going forward?
Okay, I'll give a twist because I think this question has been answered. To me, the biggest plus for agri-stroke climate investment are solutions, which requires not only blended capital, but different organizations and sectors blending their efforts and the expertise together, is the influx of talent into agriculture. Specifically in a country like India, to me, that's the biggest positive because you have the best of engineers, best of business school graduates, best of corporate leaders who have never worked in agriculture. They are getting into agriculture. They have done so for the last 7, 10 years. There are still more talent coming in. I guess they love technology, they love large scale issues, but it's the talent pool actually which will make all this happen. People from different sectors, different cross sectoral experience who can get different stakeholders together to make things happen. Ultimately, it's people who make things happen. And talent needs to be there, and talent is flowing into the sector. I think that's the biggest positive. It's not in isolation, one technology here, one solution there, but you need smart people to be able to manage that.
Perfect. So that's we would end this interesting discussion with what Arindom said: smart people for smart sector, and hence smart investment as well. Thanks a lot for my awesome panelists for joining me. And this was our last of 7 roundtables we did. And I hope all of you would have liked it, and we would have taken a lot of insight from this session. I definitely learned a lot. As usual, with awesome panel, you always learn. Thank you all. Take care. Goodbye.
Thank you.
Thank you, everyone.